what we have to do, we have to take the historic volatility or the real-time volatility into confidence to derive the trade decision. How it works? Very simple steps. We'll take the intraday volatility or daily volatility. Assume Nifty is quoting at now 8,770. This is the price Nifty is quoting, and its daily volatility is saying that 0.5 daily volatility. This we have calculated from past 10 days data. So this is from the past 10 days data. Past 10 days data we have taken. From there we have calculated this particular volatility. This says Nifty will move by 0.5% in the coming day, because currently it is at this level. Today it has closed. This is the last traded price for the day. So tomorrow we will be expecting a 0.5% of move, but we do not know whether this move will be a up move or a down move. So simply with 0.5 we will be getting that 0.5 multiplied with 8770 divided by 100, because it is in the percentage form. So tomorrow or the next trading session it is going to give us 43.85 rounded to 44. So 44 price points it is going to move. So whether these 44 price points will be the difference between a high and a low, or this 44 price point is a opening gap, or this 45 price points it has opened and gained you 44 price points, or it has opened and slided by 44%. Anything can happen. So which we do not know. We just got one estimation that it is going to move by 44 points. Now we'll use these 44 points as a parameter in our calculation. So for that I have taken that parameter which is going to give us the trend, the parameter which is going to give us the trend, parameter which is going to give us the entry and exit level. So that we will be taking it from the Fibonacci method or Gann method or Elliott method. So now we are going to take the Gann angle method. Method for intraday trading, wherein WD Gann has told that take any one price point for reference. From there you draw 11 trend lines. These 11 trend lines you should draw in such a way that every trend line should make some angle with the x-axis. X-axis is your timeline. So this is your time, this is the price. Time price graph, you draw some 11 trend lines, and these 11 trend lines should be drawn in such a way that it should make some specific angle with the x-axis. This is what this particular Gann angle method says. And here once this 11 trend lines we are drawing, this out of these 11 trend lines, whenever the price move above the third trend line we will be buying. Whenever the price will be falling below the third trend line we will be selling. This is what the process is, what WD Gann has told. But it is impossible to draw 11 trend lines at different angles and take a call on that. So he has also given a mathematical process to identify that. So mathematical process to identify that. So for that, what he has told, for deriving any of these resistances, because from here prices are moving up, it will meet this particular trend line, A trend line, then B trend line, then C trend line, like that way 11 trend lines are there. So once it is meeting this A trend line, how I will know that at which price point it will touch and go? How I will know that which price point it will touch the B trend line? How I will know that which price point it will touch the C trend line? For that reason only, he has given us some fantastic formula to us. He said that the resistances, whenever you are calculating, take the square root from the reference price point from where you will be deriving this one. So take the square root of that number, say 8770, that number. Add the trend line's degree factor. The trend line is making specific degree. Suppose if it is making 15 degree, degree factor will be 15 divided by 180. If it is making 90 degree, 90 divided by 180. If the trend line is making it 30 degree, so 30 divided by 180. This degree factor you add with that, then the entire result you take a square. This is how you calculate the resistance. How you will take the supports? Same way you take the square root of this number 8770, the reference price point from where you have to calculate the resistance lines and support lines, minus degree factor, whatever the degree factor it is associated with, then take a whole square. This is what you have to do. Now same concept I have just little bit modified. You are taking resistances and supports from a price point. So I have just removed that price point. Why I should take from a price? I have taken from the expected price range. So imagine I am going for a 45 rupees of oscillation I am expecting in the Nifty. So on 45 I will be taking this resistance and supports. Means square root of 45. This is what I did. Square root of 45 added with the degree factor of 3.7 degree, means 3.75 divided by 180, which is 0.02 and odd. That part I have added, taken a whole square. So instead of taking the reference from a price point, I have taken the reference from the expected price range. How much price you are expecting as per volatility. That only I have simulated and I got it. So in return what I am telling, after 45 rupees of oscillation, 45.28 rupees of oscillation in upside, now you are at X price. Once you move 45.28 oscillation from here, you will meet one trend line. Once you move 45.56, you will meet another trend line. Once you move 46.12, you will meet another trend line. Like this way, once you move the 52 price points from X, 52 steps once you move, you will meet the 11th trend line. This is what I have done. So this is nothing wrong. I have not diluted the method or formula for that one. I have not diluted the method of WD Gann. Just I said that, he said that you take it from price. Instead of taking from the price, I said that yes, I am expecting 45 rupees of movement as per volatility. Yes, if it is moving by 45 rupees and 28 paisa, he is going to meet with a one cycle is completed or one resistance level will come. Next 45.56, 46.28, then 51.6. So this is in the total. This is 100% retracement. It is coming. As per volatility, I am expecting 45 rupees of movement. If it crosses that 45, then another 20 paisa movement, one more resistance I will find out. Another 50 paisa movement I will get another resistance. So I am getting that till 6 paisa, another 6 rupees, 45, 6 are 51. Till 6 rupees 66 paisa I can move. This means this is the 100% retracement. All things are the 100% retracement. So here I will take a fraction of this one. I have taken a 100% retracement of the price range what you are expecting. Now I will take a part of that. So what I did, reference price point where it is closed 8770. Suppose Nifty has closed today. So I am taking the reference price point of 8770. I am adding 0.02 proportion because 100% is 45 rupees and 28 paisa. So from there I am just taking 0.02 proportion of that one and adding it with this particular level. So I am getting that particular resistance. So what I did here, instead of taking a proper high and a low, I culminated that idea that we should take the resistances and supports from one price point. It is neither high nor low. It may be a current price, it may be previous day's closing price, it may be a high, it may be a low, but only one price point as a reference. Take 100% retracement levels as expected from the volatility and take a part of that and derive the resistance and supports. So this gives us a very wonderful result in the intraday trade. So once you are trading as per these particular things, this is saying that this is one cycle is over. Those who are using the software, for them, how software is different. Suppose this is upside, one cycle is over. It is going to 8794. Whether the price will stop there? So if I just show you in one relative terms, from 71, 8771 you have started, you are going to 8794. How many points you are moving in proportionate way? Because only a part of that things we have taken, what we have calculated. So this is the thing, minus thing. Only 23.8%, 23.80 points you have moved. But as per volatility, you are expected to move 45 points. Only partly that you have taken into calculation. So there is again steam is there, again steam is there, again you have the chances to scale in this particular method. So again you have the chances to scale in this particular method. So 23 points only you have scored. So this is considered as one cycle. One cycle is over. So what is the next cycle? In uptrend, if it is going to cross that 8795, next how much it will go? I should take the reference from 8795. So this will give me the next cycle. Very next way, third cycle, fourth cycle. And intraday we observe that sometime it is to go for 3 cycles, sometime it is to go for 5 cycles if enough steam is there. But it never moves beyond that. So this is what the intraday cycles says. So today I have taken some screenshots. I have also taken a part of your back testing. So first I will show you that back testing. So in this same method, what you have seen here, 11 trend lines, this, that, proportion of that price range, I have taken a back testing of the Nifty. If I have taken a back testing of the Nifty. So same way volatility I have calculated, how much price range you are expecting, that also I have calculated. I have taken the reference from the previous day's last traded price. I have taken the reference from previous day's last traded price. I have taken only one cycle. It may go for the 3 to 4 cycle. So, and Ashish is saying that yesterday Bank Nifty gave 4 to 5 cycles. So Ashish, who is following this method very sincerely, he said that it has gone to 4 to 5 cycles. So now I have conducted this particular same thing what I have explained you. Only till 5th target I have taken. You have many targets, important targets I have taken, buy entry, sell entry, price points I have taken, and I have conducted from 13th February to 9th April, including today also you can take, till 9th April. So this is the things as per the calculation it has come. All these greens, blues are coming for buy entry. This is for sell entry. These are the buy entry targets. These are all sell entry targets. This is what happened on that particular day. You have calculated as per the previous day's close. You have not modified this method. There is a gap up opening. You have to do some adjustment because you have to take from the opening price. If there is a gap down opening, you have to take it from the opening price. I have not considered anything that. No improvement in that. With the raw method, we are taking as from the previous day's last traded price We are doing all calculation. Tomorrow once it opens, it is favorable to us, we will enter the trade. If it doesn't favor us, then we will not enter the trade. This is the rule I am putting. Today market ends, once more I will repeat. Today market ends, where it has closed, that price I will take it into reference. I will take volatility. I will calculate as per volatility how many price points it can move. I will use the same Gann angle formula to calculate my buy entry, which is at a 15-degree trend line. I will calculate the sell entry the way I explained in the same Excel sheet. Tomorrow market opens, opening price I will see. If it is favorable, I will enter the trade. If it doesn't favorable, I will not enter the trade. So I will not complicate this thing with any rule, any regulations, anything. This is my simplest rule, I can say. With this only I am going to show you the backtesting. I am not going to show you that things with it. So if tomorrow say it is not opening, the opening has opening didn't favor me, I am not going to take a trade. Because whenever you test any method, you scale down or remove all the rules, regulations, whatever associated with that, and in the most simplest form you test, and you can find out what is the success it is giving. Then with the rules and regulation, the success is going to improve. Success is not going to reduce. Success is going to improve. But in the most simplest form, what is its success? So most simplest form, previous day where it closed, from there we will calculate all levels. Today where it is opening, if it is favorable, we will enter the trade. So what happens here? So I will be just highlighting this particular row. So I think it is better if I can just increase the font size to a little bit. Select all. I am just increasing the font size to 16 so that it should be visible enough. So little bit expanding this particular things so it can be well visible. So fine. So this is the thing we are doing for a date, because we require some dates for our study also. So this is the first reference or first backtesting record has come to me on 13th February, because I require some 10 to 11 days data for calculating the volatility and all. So if I have earlier data also, I can do it. For whatever I have taken for this backtesting, I have taken it from here. So fine. So this is the buy entry. It has given you have opened at 71.4. You have gone to a high of 9024, low 53, closed at 67. This has happened during the day. Your sell entry has placed at 60. Sell entry first target was at 56. Sell entry second target was 49. You have opened at 71.40. If you have the backlog chart available with us, available with you, you can test it. You opened it 71.4, consolidated for 4 to 5 minutes or 10 minutes, maintain in that level. Smartly you moved to a high. So which is our target comes maximum to 905, first cycle only, not second cycle. So this day you have achieved uptrend fully. Then after it has surrendered the trend, give you a triggering. If you sell, you could have got one first target. If you have not sold, also forget it. Only upside you got it. Second day, you have opened at 42. You have expected 76 above. If it is opening, I am buying. 64 if it is opening, I will sell. You did not get a chance because opening itself was a gap down. You did not get. We are not going to adjust the pricing also. Third day, you have expected. If it is going to open at 19, I will be buying. 9007, I will be selling. It opened at 9029. You did not get a chance at all. Third day, you have told that yes, 53 above I will be buying and 41 I will sell. It is opened at 39.75, close near to 41. If you think that yes, I could have entered this trade as a sell trade for a 9017 as a first target, you accept it or else you ignore it, because 0.1 rupees difference is there. So as per our rule, ignore that also. This day you have no improvement. I'll just say that whenever there is a gap up or gap down, we are not adjusting or not doing any improvement. Whatever reading is coming from the previous day's closing price as a reference, based on that we are taking. So here is a gap up day, we skipped it. Here is a gap down day, sorry, gap up day. So these two also didn't come to our estimation, we skipped it. So if you see without any improvement in this particular thing, you will get without any improvement on these things. If you see, this is the last day. This is as per the yesterday's data. We have expected today, if it is moving, opening at above 8797, sorry, if it is opening above 8774, I can buy it for 8808. If it is opening below 8761, I will sell it for a target of 8734. So this is what, sorry, this is what you have calculated for today. Sorry, not for the, today means it is 9th record. This one is the, I told you by mistake. So 9th April is here. So this is the record. So this I have taken for today. Today's, this is the reading. 8814 above we will buy, 8801 below we will sell, and if you are selling it, we will have a 8774 where we have opened today. Today's opening chart is in front of us. We opened at 8808. We opened at 8808 here, but in the Odin terminal it says that 8801 level. So in fact, you accept any one of these things. So 8808 level you have opened off. Definitely 8801 would have come because it has not gone to 14. It is, chart is in front of you. So if you could have sold it 774, 25 point, you could have easily grabbed it. So if you just see without doing any improvement in this particular method, simply taking the reference from the previous day's close, if you see, if previous day's last traded price, and next day if it gives you a chance, you will enter. If next day it doesn't give you a chance, you will not enter. In that particular way also, if you start doing the trade, 20% of the trades will be successful. Means 20% of the days you will get a chance to enter the trade. Remaining 80% of the trading days you may not get a chance to enter a trade, because only the range bound days you will get a chance to enter the trade. And if you enter the trade, one most beautiful fact about this method, if you get a chance to enter the trade, you will definitely achieve all the targets of a cycle one. So trades all are doing for the trade, for the profit. If you get a chance, then your success is 100% here. If you do not get a chance without doing any adjustment, it is okay, because I did not get a chance to trade. I didn't win anything, I did not lose anything. But if I get a chance, my success is sure, as you have seen for today. So that is only for 20% days. Just to improve that things, whenever there is a gap up or gap down happening, we are just doing a small adjustment here. I'll take you to the adjustment part here. So here what happened? So there is a gap up happen or gap down happen. So we will just do a small adjustment here. We are expecting that it should open off. Let's say there's a second day here, 16th February. We have expected that it should open at 8976. I should buy, but it has opened at 8942. 64, if it is opening, I will sell. It has opened at 8942. So I'll just change. I have taken a reference from 8970. 8970, I have taken a reference. So this figure I will change it. 8970, this one I will just take it to opening price, 8942. This is where I have opened off. Once I just change this one, I will get 46, I will buy, 36 I will sell. 46, 8948 I will be buying, 8936 I will be selling. So this data, where it I have opened, I am at 42.65, 43. So 43, and it has gone a day's high, you can say 9046, days low 8942.65, that is the low for the day, and it has closed at 9015. So definitely once it opened off 42.65, it could have given you 48. Imagine this 48 also difficult for you to catch. Imagine you did not cash that 48. The moment you reported the market, that time the price is quoting at 8975. Take the reference from 8975. There is nothing wrong in that. So you can start from any price point. My point of saying that it is not only from the closing previous day's close, not only from the today's open, wherever the price is now, from there also you can start. So this is how this method is dynamic. This is how this method is powerful. So with this particular, if this particular, it is very flexible method, and so in this, if this particular method works, means if this particular method improvises with this opening price, replacing the previous day's last traded price with opening price, replacing the previous day's last traded price, the current market price. So based on their price movement on the intraday, then you will see that most of the 80 to 85% of the chances, 80 to 85% of the days, trading days, you will get the chances to trade. Simply if I will do these particular changes, wherever there is a gap up opening or gap down opening, if I will just change that price point with the gap up or gap down price point, my trading days, which was there 20%, it will go to 60%. 60% of the days I will get a chance to enter the trade. And if I enter the trade, I am not taking 3 cycles. If I got a chance to enter the trade, my probability of winning one cycle's fullest target, 100% target of one cycle, probability of winning all targets of one cycle is 80%. This is what my experiment says. This is what my experiment says. So now, this I have shown you in terms of our theoretical prospect. So Nifty you have seen. See, one more example also I have taken. Many things I have taken today. This is I have taken 943 for the Nifty. This I have taken from the Bank Nifty. Bank Nifty I have taken 942 time. In Odin terminal it was quoting at 18,901. So it is saying that wait for a clear trend to emerge, price has not entered to any of the cycle. It is saying that. So this is at 942 time. So time is reflecting here. So let us see what happened. So 942 time it has happened. So let us load this particular chart here. Bank Nifty 942, post 942, what are the price actions has happened? I am taking it from the NSE. It has not entered to any cycle till 942. Till 942, when I have taken the reading, it has not entered to any cycle. So it has not entered to any of the cycle when I have taken this reference in my software. So this is what it means I have. So when I took the reference at 942, so here, so it was not entered in any of my buying cycle or selling cycle. But it shows me one thing, if it is going above 8931 level, I will be buying for 19,000 and odd. If it is falling 18,888.5, I will be selling it. This is what it says. So let me see where it has gone. So 31, 35. So this is 942 period. Mine 942. Post that 925 it has gone. 18,925. In fact, it has gone to 18,950. In fact, it has gone to 18,968. Lows are suggesting that it has not entered to the selling side. Maximum it has made 18,968. So I can say it has entered here 31, 32. Just below the target one itself, it has surrendered and come back. So being the range bound day for the day. So then just gone till 68, didn't give you the first target also. 30 point you have expected, it has not given you anything. 30 to 68, you would not get anything. It has come out. And in fact, it has come to, because Once that is entering 8,888 level, it is telling that you can put it as your stop loss. It is consolidating for an hour. So it was neither giving you anything till 11 o'clock. It is consolidating. So post which it has triggered the stop loss, maybe 88 level triggered, come to 851 level. Even though it has come down to 853 level, 18,853 level. So this is the level it was consolidating till 11 o'clock. It has not given any targets, though it has given a breakout here, 32 level. Till 11 o'clock, you could not able to find any target here. Till this is 77 also, from 68 itself you have surrendered and come back. Then it has come down. Around 11 o'clock yourself, it has triggered the stop loss. From 9 o'clock, you are not getting the target. So here my point starts. If you are the user of Mind tool, if you are a user of Mind software, here your real task starts. 9:42, you take this observation. Within 5 or 10 minutes of waiting, say by 10 o'clock, you get this entry. Just wait for 1 hour, maximum 1 hour. For 1 hour, if 10 to 11, if you are finding out that your price is not even completing the cycle 1, after your entry for 1 hour period, if you are finding that the price is not crossing your first cycle also, because which is going to complete at 19,042. If it is not crossing that one, please quit the trade and come out. Don't wait for the stop loss to trigger. Till 11 o'clock, if the price failed to cross the first cycle, then you come out, because in a day you have only 5.5 hours of trading. Out of that, 1 hour is the smallest cycle. Within this cycle, first cycle at least should complete. If that it is not there, you have to find out that yes, the demand and supply both are equal. Buyers and sellers are tussling with these things. You come out from that trade, whatever maybe the profit or anything is there, if you are the user of the software. So if you are the user of the software. So same thing happened for the Bank Nifty today. Though we got these levels, but it was in a very tight range. This is not a proper opportunity to make the trade, because every day is not a trading day. You have to accept that. So this is what software say. You are not in a trading cycle now. So let one cycle, yes, the cycle started, cycle has not given us anything. Nifty I have shown you. Same thing happened for the Nifty. So let me show something more. What next I have taken? Axis Bank. 576, 578 level. Axis Bank future we have taken. Axis Bank future I have taken. Same thing it has happened for the Axis Bank future also. We have expected till 81 it should go. It has not gone. 76 it was trading. It has entered to 76.60, gone to 77 or 78, just near to first target, surrendered, come out from that, and it has, even though come down to 75 and it has come to 68 level, 67 level also, it has come down in the downward cycle, post which if you are tracing that Axis Bank, you could have, I'll load that also. Future stock, Axis Bank, plot. So maximum, this I'll say that. So in fact, this is being taken 944. 944 we have taken this particular reading. 944 we have taken this particular reading, and what happened? 944 we have taken. So 920, 921. This is the level, 944 level. So 944 level. We have taken it. It was no trend was there that time. So 944 level, 76.80 it has come. Then it has come to a level of, I think 77.90, 78 level it has come. From there it has toppled down. 74 definitely got triggered, and here there was a fall till 71. Here is also there is a fall till 70, and Because this much of time you are not supposed to wait, only 1 hour. If it is not giving you the things, you have to come out from that. So 68. So it was in a very, very tight band you have played today in the Axis Bank. Same way I have taken for TCS also. TCS also. So here one thing I just wish to convey you here. You enter a trade based on identifying a cycle breakout. So here it's a fantastic example for TCS also is there. So I'll show you that also. So this is for ICICI Bank I have taken. This is for TCS future. So 55 level it has taken. So here onwards it is the downward cycle and it is taken 9 o'clock 46 minutes by this point. So from here we have expected till 634 level. So what happened in the TCS? So 946 level, it has recommended you to sell 946 level. So 946 level, here is the price point, you got a recommendation to sell. So 57, 58 level it has come. So 61 is your stop loss, which has not hit because you are in the sell entry and target one. So 67 rather you can put the stop loss. 67 is your stop loss, which has not hit. So then you have moved to a level of 33.70, and here if I can focus it 32.40, 632.40, and that too also in a very 1 hours period. 10.25 you entered a trade, fantastic trade you have made it. 32, so 2 targets here you entered, and second cycle also successfully you have completed. Third cycle you have just entered and from there you have come back. So this is a clear trend case, and some cases you do not have a clear trend. So this is what the method is. So before I'll just give you more about this method and what is the levels for tomorrow as per this particular software on Nifty for levels for Monday. Tomorrow we do not have a trading here because tomorrow is Saturday. Before going to that, I'll just spend a couple of minutes to explain Smart Finance product and services. So this product what you are seeing here, it's the GAV course with the software. So the Gann angle volatility software, along with this you are getting a course also. So likewise we have different courses for the traders, and different courses for GAV course and software. So here is the course and software. Detailed discussion on this particular concept, 1 hour presentation both in English and Hindi. Along with that you get this particular software. So this software is useful for equity, future and commodity. Commodity, it is partially automated. You have to give the opening price of that particular commodity and the current trading price because we are getting some delayed data. For equity and future it is fully automated. So all segments you get it here, currencies also you used to get here. So this is about the GAV product, and all these products you get a book here, W.D. Gann's method book, you get 3 DVDs, you get the software. Likewise we have all 11 products. Some are in the technical analysis, some are in the option strategy, some are in the Iliads, all these things we have. So those who are aiming to own all our softwares, we offer them a discount of 63%. If you buy separately everything, it comes to 47,000. If you buy as a full package, you get it at 17,500. So it includes GAV, it includes our new F&O course, it includes option strategy, everything. And all this automated software has a AMC of 3,500. If you are using all softwares together, then you need to pay only 3,500. And besides that, whenever you take any of our product, month on month basis, once you open any of our software, on the front screen itself, couple of option strategy I used to give every month. So like I have given 30th March, this is the strategy for April. I have given Nifty 8300 put option along with the future at 48415. I recommended Axis. This is also 7 days holding. I recommended Bank Nifty. Though Bank Nifty and Nifty, we have a Bank Nifty, you got a good profit. Nifty, neither you got a huge loss nor a huge profit. Just it was whatever the projected level it has come. Axis Bank, it has just given you the losses. So it has currently at a level of 10,000, but within 7 days period, it was at a lesser loss. 30th March it has been given. Maximum 7 trading days, 7th April to 8th, say 9th April, if you are winding off yesterday's price, if you take it. So if you take yesterday's price into account, then this is particular strategy. Bank Nifty, you could have got this one at yesterday's price 185, it was recommended. It has gone to 340 yesterday's, that call option. So 180 to 340. So 160 point you could have win 160 point into 12 lots. So 160 into 12 into 25. So 48,000 rupees profit would have come in the call options simultaneously. So 950 if I am taking into 18,950 minus 300 into 50. So 48 minus 32, 16 to 18,000 profit has come in the Bank Nifty. Axis Bank as a loss. Nifty same way, once a small loss was there. So time to time, every month I used to get in these things. So this is irrespective of the product what you buy, these things comes. Besides that, sometime I used to keep the trend forecast for Nifty, trend forecast for Bank Nifty. So, but I used to make it sure that every month some 1 or 2 good option strategy you should get for your trading portfolio. As a buyer, you used to get it on your screen. So this is only a complementary things on that. And this particular, all these softwares are real-time softwares. It works with the real-time data. And as far as this particular software today I was presenting, this particular software is concerned, this also I will demonstrate a little bit. So it has segments like equity, stock future, index future, currency future and commodity. Any of the things you can check it. And once you check this one, the symbols will be loaded automatically. Suppose if I am going to trade SBI, I'll just type SB. So SBI will come here, equity, I'll load the data. So data is loaded. Then I'll just press one button, analyze. Based on this particular reference price, today market has ended. Based on the reference price of 85 point this thing, which cycle it has ended, what it suggests for tomorrow. So it is telling you recommend buy at 84 point this thing, 84.16, it is recommending you to buy. Second cycle, target 1 and target 2, this level you are here 85 to 85.86, in between this price you are there. So suppose if you are purchasing the SBI, put the target 1 to target 2, for safest side target 2, 281 you put a stop, 281.25 you put a stop loss, buy at this current price whatever is trading 285.86. Third cycle if it is entering, it can give you 289. If it reverses from 281, it has all chances to fall to 78. So this is what it says. So it is based on the cycle. The Excel sheet what you have seen, same thing is being programmed here with little bit of modification in the volatility calculation, which is very key for this decision process. It automatically fetches the data. If there is a gap up or gap down or anything, it does that adjustment, then does this calculation. Wherever you are now, whichever cycle you are now, that opposite cycle will be your stop loss, and till means third cycle end point will be your target. This is how it works, and it maintains a very good accuracy ratio, because as I said before, as smart finance grows, its product also used to get that maturity. So this product has a 10 years experience of smart finance, whereas other products has a lesser experience, though we are modifying those products also. But this intraday product having a 10 years experience of smart finance, because for all these 10 years it is being in the smart finance developer's mind. So definitely it is being worked out for 10 years. So again, I'll just load for the Bank Nifty, and I'll just see what level you are expecting on Monday. So based on these particular things, it is telling that you have ended at downward cycle 1, target 1 and target 2. So this level itself you have target 1 and target 2. This level itself you have ended. We do not know what will be the gap up or gap down on Monday, but we have ended here. It is recommending, if it is closing out, if it is opening out in the same price, say above 800, if it is opening out to Monday, if it is opening between 18,840 to 18,813, this range, I'll think of selling it, putting a stop loss of 18,954, and I'll ultimately wait for 18,562. But if there is a gap off on Monday, then these readings will change. You have to take a fresh reading on Monday. But as of now, this is the thing. Now for the Nifty, if I'll just take it for the Monday, what it is saying that you have not entered to any of this trading cycle. You have not entered any of the cycle. You have just ended somewhere. So let one cycle to start. If it is starting at 8795, has all probability to go to 8704. If it is starting at Monday at 8807 level, all probability it's there to take it to 8924. But one thing I used to tell you to all the buyers, those who have already bought this product, I will tell them one very good secret of this particular software. Do not chase the counter in the first cycle. Keep it noted. Give some time to mature the price. Give some time to mature the price. Even though if you are getting a chance to enter the trade in the first cycle, please wait for the second cycle to start. You still have the opportunity. Still have the opportunity. Enter it in the second cycle. Second cycle, entry point. But once it enters the second cycle, your stop loss points will change as per the reading. If that time you calculate, your stop loss and other things will change. Stop loss will not come to this 120 points and all. Once it comes to 8847, if you recalculate, your stop losses will be here, very near to 8847, some 10-15 points up and down it will be there, because the reference will be taken from here. But you will be entering at this particular price. Once it take a calculation, but just leave this first cycle. Once you are getting an entry into the second cycle, your probability of winning the trade increases to a great extent. I can say that once second cycle enters and you enter a trade, majority of the trades you will get the success. More than 90 to 95% of the trades will be successful. But if you are a quick trader, just punch that, you are in front of the system, quickly you are oscillating, nothing wrong in entering the first cycle. But once you enter in the second cycle, it's a matured price. It gives you a great success. It gives you a great success there. So this is one of the secret of this particular software. One of the secret of this software. So if you enter there, then definitely you will get a good success there. Fine. So with this, giving you that offer, whatever the new products has come in the month of March to April, for both the products clubbed together, we are giving you an offer. If you are interested in that, you can contact our sales number. So definitely I will not be available in this sales number. You can contact any of this sales number, Mumbai or Chennai. Preferably if you are located in Mumbai, you call to Chennai, understand about the product. If you want to get that product, it is readily available at Mumbai. You can get it from there. But there sometimes they may not explain well because they are not our team. They are just resellers. So call to Chennai, clarify all the things, but if you want to get that product from Mumbai, you can very well obtain it from there. They will receive it in our name and get it, the things. So this is about the products, and this is what I have shown you for this thing. Suppose if you are going for commodity, how it works. Some people are asking that if I am going for commodity, how it works. So I will show you for the commodity also. So commodity, once you are going for, suppose you are going for say gold. So once you select the particular commodity, the expiries will be selected here. So 3rd April we have, 5th June we have. So I'm just waiting for this 5th June. I have just loaded it here. Gold, you can take any of the gold mini or anything. This is just loading the data. Whatever the historic is required for calculating our things. So here these two things, though we are obtaining that data, but we are little suspicious about that data. For that reason only we are asking the user to give us that input. Say you can say 18,000. I'm putting some 18,700 was 28,700 was open. Say 28,000. Now 28,000. Say 535 it is trading, something it is trading, and I am just so analyze this thing. It is telling you which cycle it is there, where to trade, whether to buy or sell, and whichever the cycle you are there, that opposite cycle will be your stop loss. So this is how the commodity only works in this order. Remaining things we are taking the for stock and indices, you need not have to input any data. It fetches the very concurrent data for our calculation.